Something that a lot of people want to know about is how they should save for a down payment on a house or how they should save for really any goal. And I created this compound interest calculator where we can see that if you put $20 a month, or sorry, $20 a day into Bitcoin and Bitcoin grows at 50% per year over the next 5 years, you're going to have $163,000. While, let's say, for example, if you go with a bank account and you put $20 a day at 0.1% interest, you're only going to have $36,000. What are your thoughts on this, guys?
Yeah, it makes me think of somebody trying to save for, a down payment, right? And how you literally could, if you were saving in fiat, the price appreciation, because real estate is, uh, it takes in liquidity out there. People buy it, and the price of it typically does go up over time. It could actually increase at a higher rate than you could save at by working and saving in fiat. So you could be continually running on a treadmill trying to save enough to get a piece of real estate, and it continues to become unaffordable over time. So you're just never going to get there. You could potentially never get to a point where you could afford a down payment if you're only saving in this way. Whereas, yeah, Bitcoin is the cheat code, right? It appreciates way higher than any other asset out there. Predictably, of course, we're looking at historic gains, the history. So you can never for sure say that that's going to happen in the future, but it has performed very stably, even though people think it's so volatile. But over time, it's pretty stable and up and to the right. So it's a bit of a cheat code for somebody, and a bunch of us out there want to be able to afford a home. Like, that's a dream of many people, and it becomes almost impossible just with fiat as a savings mechanism.
Yeah, I think that using these examples, and I hope after this, Rajat, you can kind of just walk through that again in terms of like the differences after we talk about this, like show the differences between saving in fiat versus Bitcoin. I think it's good to kind of circle back there. But I think that if you just think about this very simply, but to bounce off of Forrest there a little bit, is that yes, this is based on historical data. We can't predict the future. But I think if you ask the three of us, is it going to be lower or higher of a return over the next 10 years? I think that three of us would probably say higher, just based on the fact that, what we've seen in terms of the countries, companies, people adopting this, the demand growing for it. And there's only about 1% of people who are actually, invested in Bitcoin. A much smaller percent actually understand what they're holding. So I think that the S curve part of this, the vertical part, still is yet to come. So I think that it is important to note that this is historical base, but common sense would say that we're trending in the same direction. So, I mean, just think about this without the numbers, without the spreadsheet. Just think about if you started saving 10 years ago for a down payment, and you had $10,000 a year, which would be pretty good for a lot of people. What would you have at the end of that saving in dollars? You'd have $100,000. And do you think that $100,000 would go further or not as far today versus 10 years ago in terms of real estate stuff? And if you compare that to Bitcoin, seeing on average about 60% a year, you can kind of do the math on what that would be compared to just putting in a savings account there. And I think it's important too to kind of explain why real estate's going up like it is, right? Because it's fairly scarce. You can't just throw up a house. You can't print houses. But the other thing too there is like if you're trying to save some money and if you had the option between, like in the existing system we have now, if you had the option between putting into a checkings account, which is earning like a 1% max, or you could put it into like real estate. Like let's say you're doing $100 a week and you wanted to either put it into a savings account or real estate. Most people would put it into real estate because it's a better store of value. But unfortunately, you can't put like $100 into a house every week. So that's why Bitcoin is the perfect supplement with this, because it holds its value very much like real estate does, even better actually for the last 10 years. And you have the ability to do that with $100. You don't have to buy like a fraction of a house, a brick of a house, anything. You can actually buy sats within a Bitcoin. And that's actually a much better place to store your wealth. That's kind of what we're talking about here as a savings tool, as a place to take your time and energy and put it into like the world's best battery with 0 leaks in it, that is Bitcoin.
Even that $100 that you're mentioning, you can't really buy real estate. The prices of houses are way too high. You need to borrow a ton of money. And I was actually doing a little bit of research on when, just because with, let's say you wanted to buy stocks. If you want to buy a certain stock, the price is going to be so high, you may not even be able to afford it, right? Let's say who can buy Amazon shares today? Actually, Amazon had a split, so people can buy it. But I don't know if you guys know when fractional shares were introduced. I just did a quick search. Most of the people, most of the brokerages that offer them only started recently. So if you wanted to
Like
buy,
you're talking about like Robinhood or something?
yeah. So
Okay.
like, I actually have a list of them here. So Wealthsimple, M1, Robinhood. Robinhood started in 2019. So before 2019, if you didn't have a certain amount of money, you couldn't buy stocks. Like there was a minimum amount that you had to, even if you wanted to buy, let's say VOO, that's just the S&P 500, you'd have to have a certain amount of money. If you don't have that certain amount of money, you can't buy it. Let's say you only have $1 a week to save. You can't buy the S&P 500. You can't get exposure to the biggest stocks in the world. Now you can. And I think part of it is because people started buying Bitcoin. With Bitcoin, you can buy as much as you want to. You can buy 50 cents if you want to. I actually had a day where I could only buy $1.82, $1.82 worth, and that's what I did. I bought 1,800 sats, right? That's it. I'm okay with that. 1,800 sats is more than a lot of people are going to ever have. So to me, that's crazy. But you can't do that with stocks, at least until more recently. You couldn't do that. You can do it at all. You'd have to save in a bank account. You'd have to see your money just die.
Hmm. Yeah, I mean, you can buy real estate investment trusts that exposes you to the real estate market, but there's a whole list of employees that work for that. There's maintenance, there's so many all of these things that are out of your control, and historically that underperforms even the S&P 500. The vast majority of REITs out there, real estate investment trusts. So there's no good saving mechanism in my opinion. Until Bitcoin, like they are, like George said, they're like a battery that's leaky. There's a lot of leakage, a lot of your capital that it can escape through all these different ways. Whereas with Bitcoin, it's perfect digital property. A lot of people consider it, digital property, and that's what houses are. They're physical property. So it makes sense to save in something that's going to outperform what you're wanting to buy in the future, because then you can get to that position where you have the available capital sooner if you're able to outperform that other asset that you want to acquire that you're not able to without a large sum of money.
Yeah, I think it's just important to note that why, digital property, what's so good about that? But we've never had an asset before, and I think this is important for people to understand. We've never had an asset before like Bitcoin that's truly scarce. There's been scarcity before. Real estate would be one of those things that is considered scarce. That's why it's been a good store of value over time. Gold would be the second best, or probably the best actually, at a 2% in new gold inflation rate every year. But that's what makes it so valuable, and that's why I think that it's funny, when we were kind of preparing to do this, we were looking at a website. And so we were entering in like the 1% savings tool, which is saving in dollars. And we tried putting in Bitcoin's historical average of return, which is about 60%. And the website wouldn't even let us put in a number higher than 35, because this is just completely unheard of for somebody to be able to store their time and energy into a battery that, produces a 60% return every year on average. And so I think that it is important to understand the scarcity and what makes this thing so unique, because it is, when you're trying to compare Bitcoin to something, there's literally nothing else that you can compare it to. And when you hear things like all other models are destroyed, that's a perfect example of that website not even being able to keep up to the gains of what Bitcoin's been providing, right? So I think that is an important thing. And for the Gen Z out there who kind of feel like there's no hope for you in this world right now, Bitcoin it's the only hope we have. I think that for the Gen Z people who are trying to work as hard as they can, 1 job, 2 jobs, 3 jobs, they're not getting ahead. They're just barely paying their rent. It's impossible. It's actually impossible for a 20-year-old right now to save up and buy a house. And if they're saving their time and energy in dollars, But
I would even go as far as to say that stocks are a trap for millennials, because by the time that, let's say, baby boomers start retiring, they're gonna start dumping their shares, and then by the time Gen X starts retiring, they're gonna dump their shares, and then even for so I said millennials before. Let's say for Gen Z, they're gonna have to deal with millennials dumping, because there's a lot of millennials who are just buying index funds blindly because that's what they think is
yes,
going to perform. It performed in the past, so they think it's going to perform forever. I actually
Mhm.
think those people are going to suffer, right? They're going to lose a lot of their wealth because they're going to be being dumped on by literally everyone. People think you just buy the dip, and that always worked in the past, but I don't know if that's going to work anymore.
I agree. And I think that if just going off of that, I think that it's important for people to really, and I didn't know this myself, like before Bitcoin, I was a big stock market guy because that was kind of the
Sure.
only option
Yeah.
for me. It just made the most sense.
Yeah.
And I would look at like the stock price, kind of the little bit of the last couple months performance, kind of what they got going for them. But if people just actually objectively look at like a stock, like Apple or Nvidia, something that a lot of people have that they don't really understand the company, but never mind, they don't understand the PE ratio there, which is the most important part, in my opinion, for people to understand. Whereas like a PE ratio of 50, like Nvidia has, means that it's gonna, if you bought one share of Nvidia today, it's gonna take you 50 years to basically get your 100% return out of that. And the reason why there's such a huge PE, the spread there, is because there's just so much capital out there that really has nowhere else to go. And so it just keeps finding its way into these companies like Nvidia and Apple and Microsoft. And so they're extremely overvalued. If you just look at their earnings objectively, because that's what the PE is based on, the company's earnings. Like, how many years will this company have to produce this amount of earnings to earn 100% profit on this? So if you look at 50 from Nvidia and you look at Bitcoin, even though they're two completely different things, like Bitcoin's not a stock or a company, but Bitcoin's two.
Hmm.
At a 50% return, annual return, the PE ratio would be 2 for that. So that's like a not even a close comparison. It's just that most people haven't really objectively looked at their investment. And I think that's a big problem for a lot of people.
Yeah. And if we look at MicroStrategy, people are so angry that they're selling at a premium of what,
Exactly.
1.9?
Yeah. So think about if that's the premium on MicroStrategy and people are upset about it, it's because people are actually looking at what's happening there. They're looking at the earnings. They're looking at what MicroStrategy is holding in terms of their balance sheet. That's why there's so much scrutiny on that, is because people are actually looking at it. Everything else is just like, okay, well, this is what I'm supposed to do, or this is what my guy told me to do. They have no idea what they're holding. They have no idea what the earnings are and how long
Yeah.
it would actually take to recoup your initial investment there.
Yeah.
Yeah.
NVIDIA is an interesting one too. I mean, this might be a little off topic, but there's kind of that saying, I don't know the exact quote, but it's like your margin is my opportunity or whatever. And it's like the only reason NVIDIA has such a premium on it is because they're years ahead in chip manufacturing compared to their competitors in this specific area that is now deemed worth, the premium, which is, the chip specifically for AI. And they have all of those other competitors who are going to try to, as quickly as possible, rapidly catch up to them and take that margin away. So yes, their profits, they need 50 years of today's profits to justify or to get back your kind of earnings. um are they going to be able to maintain those margins? Like, you're taking on so much counterparty risk by investing in companies because you don't know what the future is going to be. Will all of these companies that end up buying these chips, will they train the models, and then after you train the models, you actually only need a fraction of that many chips to run the models or to run the chat bots that they've created or whatever AI they've created with it. And you know DeepSeek is open source. Llama is open source. That means that they're not trying to create money by creating this code. And what makes you want to pay like ChatGPT premium to get this closed source model when there's open source models that can compete with it? So like there's just competition along the board for all of this, and it's all taking away all of that margin that any of these companies have, and it's incredibly competitive. Whereas Bitcoin really stands above and stands alone in what is its nearest competitors? Like nothing as
Gold.
far as I'm concerned. Yeah, gold, really. Because all the other cryptocurrencies, they're not even trying to compete with Bitcoin. They're trying to compete with Ethereum, the second biggest cryptocurrency. And you can see, Solana, Sui, they're taking market share away from Ethereum, not
Mhm.
from Bitcoin, because they're not even in the same league. They're not competing over the same thing.
It's like the NBA versus house league. Like there's no comparison.
Yeah.
Yeah, honestly, all models are destroyed right now. And I think it's, we started this with real estate. We ended up in the stock market. And I think the last thing I would say on that is like, if you look at NVIDIA, and I did like a little analysis on this a couple weeks ago on my channel, but like NVIDIA right now has 90% market cap. And we're looking at their competitors and who could like evolve in this space. They have 90% of the market cap right now with a 50% premium. So all this is based on expectations. And if you got 90% of the market cap, there's pretty much only one way to go there in terms of market cap. Like they're not going to go up, right? Especially when you're competing against tech companies and all of a sudden this sleeper comes in from China, DeepSeek, and just blows you out of the water. Like this is what's going to come, turbulence over these next couple of years as technology and AI improves. And so if you look at the market cap of Bitcoin right now, I would say that the market cap, the percentage of the market cap would be, if you got 90%, what's that?
The market cap dominance is the term?
Well, if we're looking at like, sorry, the market share, like the 90% that NVIDIA has in terms of like their products that they sell, they have 90% of the market with that. And I know Bitcoin's not a company, but if you look at like Bitcoin's overall market cap, like there's 1% of Bitcoin or 1% of people who own Bitcoin right now. So in that sense, there's only going up from there pretty much, unless something crazy happens. But that's just kind of the spread in terms of one company's like a huge premium on it, got all the market share. That's what I meant, market share, not market cap.
Yeah.
They got all the market share. And then Bitcoin is over here and they're like, we hardly have anybody right now, 1% of people. There's only to go up from there, right? So that's kind of the way I look at the two, comparing them. Oh, sorry, Rajat.
No worries. Yeah, so this is what you were referring to there, the Bitcoin dominance.
That's compared to other crypto currencies, right. But he was actually talking about the adoption, basically.
Oh, the adoption, share, right? Where so that's even lower.
That's even lower, yeah, because Bitcoin 57% dominance over other cryptocurrencies. So I actually think the Bitcoin dominance is going to go up because more people are realizing that the other cryptocurrencies out there are not worth anything. Since last time that we saw these levels of Bitcoin dominance, there's millions of other crypto coins getting created, and that dominance still hasn't gone down of Bitcoin. Right. Yeah. So they're just creating all these things that are worthless compared to Bitcoin. It's not even affecting the dominance chart. But then, what Jor was talking about there was the adoption rate. So there's 1% of people have even gotten into Bitcoin. So there's a lot more to go up in that scale, right?
Sorry, that was a poor choice of words there. I meant market share, not market cap.
No, that was great. I feel like that it helps with everybody's understanding as well. I mean, that dominance chart definitely helps people's understanding too. So
definitely,
that's fine.
Those are both important things.
Okay, so back to the original topic that we were talking about. If you're saving for a house, if you're saving for anything, if you're saving for a car, don't save in dollars. Don't just keep your money in a bank account. Save in Bitcoin. If you're too scared of Bitcoin, learn more about it. Stocks are better than dollars, but I think over the next few years, we're going to see that stocks aren't going to perform as well. Of course, the market cap for stocks is pretty much fake because governments and the wealthy can just keep pumping more and more money into them. They can do whatever they really want to. With Bitcoin, I think because it has that finite supply, it's going to blow everything else out of the water.
Yep, absolute scarcity. It's the first time we've ever seen that ever. You can't think of anything. If you believe, the theory that the universe is expanding, that it's, expanding into infinity, right? There's nothing that is infinitely scarce besides Bitcoin.
So Rajat, maybe just to round this out right now, I think that, could we look at the chart one more time where you showed the difference between saving in dollars versus saving in Bitcoin and what kind of a difference that'll have for somebody who's looking to put a down payment on a house over the next couple of years?
Yeah, for sure. So let's say you go for 5 years. Let's say you put 10,000. Let's say you put $10,000 in into your investment portfolio, into your savings account every month. If you're going with a bank account, let's say you get a 1% interest rate. I'll be more conservative for banks because they're not even going to give you that much. But if you have a 1% growth rate, $10,000 a month for the next 5 years, you're going to have $51,000. But if you put it into Bitcoin, let's say what kind of return do you guys think Bitcoin's going to give over the next 5 years, considering a bear market, considering all that stuff?
Do something incredibly modest, 25 or 30%, something like that.
So 25%, you'd have 102K.
Yeah,
So you'd go
twice as
from
much.
51,000 to twice as much, 2 times as much.
In
And
5 years.
That's literally just for putting your money into a smarter savings vehicle. That's it. Like that's all you're doing in 5 years.
Yeah.
Let's say in 10 years, so you'd have 415K with Bitcoin. With your savings account, you'd have 100K. So you'd go to 4x.
Yeah.
And then 15, let's go 15 years. So 15 years at 1%, you'd have 162K. With Bitcoin, you'd have 162K versus, what was that, 2040? 1.3 million. That's insane.
That's what's up.
And again, it's important to note here that historically for the last 16 years, the average return on Bitcoin has been 60%. We're looking at these from 25%.
Yeah.
Very conservative numbers. So if we divide the difference by 15 years, what is that? 1.3 million. It's almost like the entire amount, but let's say 1.2 million divided by 15 years. What is that? 80K a year. That's huge.
Wow.
Yeah.
That's basically a salary.
Yeah. Yeah. And then, the thing is, right, as we're talking about, saving for a down payment, this would require you to eventually sell that Bitcoin when you want to buy a house. So that's a different subject. You might end up realizing, hey, I can outperform, the appreciation of this house that I'm going to buy if I just retain this Bitcoin. Because if you price for inflation, housing is pretty stagnant. Actually, it tracks global money, but that's maybe another thing to go down. There's value to owning your own home. So yeah, maybe we won't go
definitely
there.
Yeah, and who knows? We might be in a place at that point where the banks are much more friendly with Bitcoin and actually want to hold your Bitcoin and give you a lower rate if you put your Bitcoin up as collateral. Maybe you only got to take a portion of that and sell it, and then you can use the rest as collateral for your mortgage. So the whole thing, I just see that there's zero downside to doing this. I mean, what's the alternative? That's what you got to ask yourself. Is like the goal here is to get a house. You're doing what you're already doing. You're going to work. You're putting your time and energy into this. The leftover, that's what we're talking about here. You don't have to do anything crazy. You don't have to take on debt. We're talking about things that people are already trying to do to afford a house. So you can put that into your savings account. You can put that into NVIDIA shares, or you can put that into Bitcoin. And I think that the beauty of this whole thing is the more and more people who understand that Bitcoin is the best one, that 25 is going to go to 60 and then 65 and then 70, because that's how something with absolute scarcity works, which is like, I think the perfect way to put a bow on it. So I think that's a good chat here, boys. I think that people are going to get a lot out of this. Consider sharing this with a Gen Zer in your life. Do you guys have anything else to add?
Nope.
I think we're great.
Okay, perfect. So this once again has been 3 Canadians walk into a bar talking about Bitcoin, and all of our information for the channels will be below. Thank you for watching this, and we'll talk to you soon.